Well, friends, good morning. So, the topic of the day is India's general insurance sector projected to reach $57.3 billion by 2028. I repeat, India's general insurance sector projected to reach $57.3 billion by 2028. So the general insurance market in India is forecasted to grow substantially, achieving a gross written premium of INR 4.8 trillion by 2028, marking a significant increase from INR 3.35 trillion in 2024, means 2024. This represents a compound annual growth rate, that is called CAGR, of 9.9%. Projection for 2024 indicate an 11.2% rise in the sector. The sector is largely propelled by key insurance lines such as personal accident and health, motor and property, which together comprised 93% of all general insurance premium in 2023. So the general insurance industry in India has continued its high growth trend and grew by 13.2% in 2023, driven by economic growth and rising disposable income. So, rising consumer awareness of health and other general insurance products and robust regulatory reforms also supported India's general insurance industry growth. The trend is expected to continue in 2024 and 2025. In 2024, personal accident and health insurance is poised to dominate the industry, projected to account for 39.5% of the gross written premium, forecasted to grow at 14.5% in the same year. So this increase is primarily driven by greater health consciousness following the COVID-19 pandemic and the continuous rise in medical costs. So from 2024 to 2028, the CAGR for personal accident and health insurance is expected to reach 12.5%. This is a significant development. Supporting this growth is the proposed introduction of healthcare regulatory register in December 2023, which aims to enhance the standardization and regulation of hospitals and health insurance systems. Further supporting the industry, the Insurance Regulatory and Development Authority of India has greenlit the introduction of Bima Sugam, an insurance electronic marketplace which launched in March 2024. So this initiative aims to streamline the process of purchasing, selling, servicing of insurance policies and handling claims and grievances, promoting greater efficiency and transparency across the insurance landscape. The growth of motor insurance in India is also significant. So motor insurance stands as the second largest category, estimated to hold a 31.1% share of the gross written premium in 2024. So with an anticipated growth of 10.4%, this growth is linked to a rise in vehicle sales, which surged 12.5% in March 2024 compared to the previous year, as reported by the Society of Indian Automobile Manufacturers. The sector is expected to see a CAGR of 7.9% over the next 4 years, partly spurred by the new vehicle scrapping policy that mandates the scrapping of private vehicles older than 20 years and commercial vehicles over 15 years old. So the growth of property insurance in India is continuing. Property insurance is forecasted to represent 22.5% of the gross written premium in 2024, with an expected annual growth of 10.4%. This segment is bolstered by an 11.1% year-on-year increase in governmental infrastructure spending, which totals $134 billion for the fiscal year 2024-25. The recovery in the economy and rising disposable income will continue to support the growth of India's general insurance industry during the next 5 years. Initiatives from the government and favorable regulatory reforms will help in increasing the insurance penetration rate in India, that is 0.98%, which was lower as compared to other Asian markets such as Japan 1.75%, South Korea 1.46%, Hong Kong 1.65%, and China 1.26% in 2023. But India, this has just reached 1% only. So India's general insurance industry is set to grow at a compound annual growth rate of 9.9% from INR 3.35 trillion in 24 to INR 4.89 trillion in 28. So in terms of gross written premium, because this data reveals that the general insurance industry in India is expected to grow by 11.2%. So the industry is continuing its high growth trend and grew by 13.2% in 2023. So driven by economic growth and rising disposable income, a rising consumer awareness of health and other general insurance products, and robust regulatory reform also supported India's general insurance industry growth. The trend is expected to continue in 24 and 25 also. So positive regulatory developments will also support the growth of personal accident and health insurance. In December 2023, the government proposed to establish a healthcare regulator to recognize, standardize, and regulate hospital participants in health insurance. The regulator will be primarily responsible for increasing health insurance penetration, thereby moving the country towards achieving healthcare for all. As part of the Insurance for All by 2047 initiative, means 2047 initiative, the Insurance Regulatory and Development Authority of India approved the launch of the Insurance Electronic Marketplace, that is Bima Sugam, in March 2024. So it will serve as a one-stop solution for all insurance stakeholders like insurers, intermediaries, agents, and customers. So it aims to facilitate the purchase, sale, and servicing of insurance policies, as well as the settlement of insurance claims and grievance redressal, thereby promoting transparency, efficiency, and collaboration across the insurance value chain. Motor insurance is the second largest line of the business, that is estimated to account for 31.1% share of general insurance gross written premium in 2024. So the motor insurance industry is expected to register a growth of 10.4% in 2024, driven by rising vehicle sales. This growth is anticipated to continue and propelled by a rise in disposable income and an increasing rate of road accidents. So the growth in vehicle sales was also fueled by the government vehicles scrapping policy, which came into effect on April 1st, 2023. The policy requires private vehicles older than 20 years and commercial vehicles older than 15 years to be scrapped. Motor insurance is expected to grow at a CAGR of 7.9% during 2024 to 28. Property insurance, the third largest line of the business, is estimated to account for a 22.5%. the share of general insurance gross written premium in 2024. Because the property insurance is expected to grow by 10.4% in 2024, supported by investments and infrastructure projects. So the government has increased its infrastructure allocation by 11.1% year on year to $134 billion in the 24-25 budget, which will support the growth of property insurance to grow at a CAGR of 8.3% during 2024 to 28. Next, the liability, marine, aviation, and transit and other general insurance products are estimated to account for the remaining 6.8% share of the general insurance gross written premium in 2024. So, recovery in the economy and rising disposable income will continue to support the growth of India's general insurance industry during the next 5 years. Initiatives from the government and favorable regulatory reform will help in increasing the insurance penetration in India to 1%, which is lower, in fact, today. But the way the general insurance industry is growing, the day is not far when this industry will reach a magnificent figure in the next four years. Simultaneously, the penetration will also increase because general insurance penetration is a matter of concern. It is not rising above 1%. Despite of India's health insurance market, which is growing very fast, and other motor as well as the new one that is cyber is also increasing. So the sector is expected or anticipated to expand by 15% in 2024. The rising service cost and technological advancements have also contributed to higher premium rates, a trend expected to continue in 24-25 also. The IRDAI has advised insurers to create products for senior citizens, students, children, and other age groups. Although insurers can reassess risk, which may lead to higher premiums. Other regulatory changes include establishing a new healthcare sector regulator to enhance insurance penetration and implementing composite insurance license, allowing insurers to offer life, general, and health insurance under one entity. So these measures are expected to attract new market participants, further driving the growth. The rising demand for health insurance can also be attributed to the digitization efforts of new age insurers aimed at expanding insurance accessibility using digital platforms. So this has led to the adoption of disruptive technology by insurers to stay ahead of the competition. AI-powered chatbots and virtual assistants have enhanced customer service, while AI and machine learning models have streamlined underwriting, allowing insurers to tailor products to customer risk profiles. So AI and ML tools also aid in guided selling, effective outreach, and fraud detection, reducing cost and improving offerings. So these are the factors which are contributing to the growth of the general insurance, and all positive regulatory reforms and initiatives by the government will help in improving the health insurance penetration rate in India, which was lower as compared to other regional markets such as Taiwan, Australia, China, Hong Kong, etc. And now, the India general insurance market is expected to grow immensely. Thank you. Thank you very much.